The accountancy industry is performing extremely strongly with record revenues of 21.3 billion in 2022 across the top 75 firms, up from 18.8 billion in the previous year, with average growth running at 13%. The value of the accountancy business has more than doubled in the last decade. Annual revenue in 2013 was 11.48 billion, and today's figure has nearly doubled to 21.3 billion. It's fascinating to see how strong the market is for accountants at the moment. And this year's profitability was strong, up 13%, with profit of 3.38 billion across the top 75. The big four firms, PwC, Deloitte, EY and KPMG, continue to dominate the market with 17.26 billion in total fee income. So they account for going on for what, 80% of the total market? But having said that, you can see the top 20 are growing, and there are a lot of mergers going on as well, you know, as external investment from private equity firms, which is driving acquisitions. There have been big profits on the back of the pandemic, which was strong for accountants, as it was very challenging for lots of businesses who needed to look for expert professional advice. On the financial front, PwC moved back into the top spot this year with revenue in excess of 5 billion, overtaking Deloitte with 4.9 billion. In third place, EY was the strongest in terms of growth, reporting a 17% increase in revenue to 3.32 billion. One of the fastest growing firms in the top 10 was Assets Group, which has just attracted further investment from private equity firm Pay Partners. One of the most significant trends in the market is the interest from private equity firms. So in the last 12 months, there have been some really significant private equity deals into the accountancy sector. There's been 9 major deals worth an estimated, 500 million invested by a range of private equity firms. So we'll talk about some of the deals in a slightly more detail as well. Now, the accountancy sector is seen as a prime target for investment with strong growth potential, stable fee income and long-term commitment from partners and senior management. There was a perceived risk that a lot of the senior partnership would leave after private equity investment, but that is not happening. So again, that's giving a lot of confidence to private equity to look at this sector. And also they're looking to invest for the longer term, which is good, as they are not just doing a quick investment and selling on. Much of the investment is being used to fund acquisitions and also, interestingly, invest in technology. There's a lot of targets around for these accountancy firms with partners retiring and looking for the longer term stability for their firms. In terms of challenges facing the accountancy profession, staff recruitment and retention is a major concern, while the impact of technology, demand for business advisory services and increasing commoditization of accounting and tax work means that firms need to be thinking about how they can add additional value to their services and increase fees. Now, more regulation and increase in tax compliance complexity are also a challenge for firms and their clients. Now, while a deterioration in HMRC service levels means accountants are relied on as the first port of call for businesses. For more information, we have detailed analysis and league tables on the state of the market at accountancydaily.co.